Three Stocks 4 is coming soon to Ausbiz. Register now, ausbiz.co/3. The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Welcome to The Trade. Before we get into the charts, let's take a look at what traders are watching out there. US President Donald Trump backing off on his threat to speed up 50% tariffs on imports from the European Union, agreeing to extend his deadline for trade talks until July 9th, after the head of the EU said that the bloc needed more time to reach a good deal. Oil prices gained early in Asian trade after President Trump extended that deadline. And Israeli military strikes killed at least 30 Palestinians across the Gaza Strip on Sunday, including a senior rescue service official and a journalist, according to local health authorities. And China's ambassador to Canberra has criticised the Australian government's intention to return the port of Darwin to local ownership, saying the Chinese company running the strategically located northern port should not be punished. All right, let's turn to the charts, and to do that we're joined by Gary Glover from Novus Capital. Gary, welcome. Good to see you on this Monday. Let's start stateside then, and we did see, particularly we take a look at the major US indices, did take a fall off the back of that news that Donald Trump was going to whack EU exports with a 50% tariff. He has since backed off on that. Overall though, let's first start with the S&P 500. What are you seeing at the moment?
Yeah, I thought it's important, Andrew, to maybe have a look sort of further out. So look at some longer term charts there, because obviously there's a lot of short term noise going on in the market at the moment. So you can see here, this is the longer term monthly chart. But what's sort of most obvious there is that each sort of pullback on the monthly has just sort of sat on top of the previous high, or actually left spacing. So we sort of saw there in 2020, we pulled back to that sort of 15 high. In 2022, we pulled back to the 2020 high. And then just recently, we've pulled back to that 2021 high as well. So it's just held the trend in a pretty strong position. So just normally when you sort of sit on, just like a normal trend will just sort of build on top of the previous sort of phase. So just a really healthy looking trend longer term. So nothing negative about this longer term trend here, quite positive. And normally when you sit on top of the previous high or leave spacing like it has done, normally means that you're going to move to a new high here eventually there. So longer term trend looks pretty robust.
All right, that's how it's playing out on the S&P. What about the Dow Jones? What are you seeing?
Yeah, the Dow's sort of similar sort of story there. I guess the most interesting thing with this last sort of rally and pullback is that the previous sort of range there, the sort of pullback in that range, the S&P and the Dow have both sort of expanded like 100% of that range. So that sort of pullback from 22 to, well, the sort of 22 high to the 22 low there, that range is sort of expanded 100%. And now it's sort of come back and again, pull back, set on top of that previous high, and it leaves it in a strong position. So the one thing we know, when a market really bounces pretty hard, comes out of these sort of deep lows like this, kind of one of the two things happens there. So if you look at October 22, we rallied out of that low hard, and then we went sort of sideways for a few months before we sort of continued higher. Or if we look at October 23, we rallied out of that pretty hard, and then we sort of ground higher here. So I think we're going to probably follow the same path like we did that October 23 there. So I think you'll just sort of see a slow grind higher here and eventually move back there. It's just interesting there that, looking at longer term cycles there, sort of 60 years ago, President Johnson brought in tariffs as well, which caused the market to freak out. But within 90 days, the market had moved back to retest the highs and went to new highs. So, it's quite possible here we could be at new highs within 90 days of that recent April 7 low, if we follow history there.
All right, so that's what's playing out at an index level. Gary, let's move locally, some stocks you're watching at the moment. The first one being Johns Lyng Group.
Yeah, John Ling's really interesting here because they've sort of got a market cap, Andrew. They're probably only about 650 mil. Yeah, it's doing about 1.15 bill in revenue. So it's not even trading at 1 times revenue, which, most stocks on the exchange are probably trading at least that and a fair multiple of sometimes. So definitely some value there. Just need to look around sort of New South Wales and Queensland to sort of see the sort of, the weather and sort of storm damage there. So that's generally a pretty positive thing for, sort of domestic business for John Lyng, sort of doing those insurance repairs. So, there's not a ton of debt here. So I thought that maybe been one of the risks why it's been valued down here. And the US business at this stage is still pretty small. So that's probably the biggest risk is, implementation. Obviously, a lot of businesses can struggle to sort of make a mark in foreign markets there. But at this stage, it's only a sort of small parcel there, sort of small size there. So I think this is a good valuation opportunity here. We see technically we saw a breakout of that little descending wedge, and we've seen a bit of a consolidation, and now a breakout of that consolidation as well. So we're just starting to see a few high lows building here. So I really like this one here. I think the technicals look pretty supportive, and the fundamentals there. There's definitely some value in this one here longer term. So
Yep.
Yeah.
All right, some upside potentially there for that stock that has more recently been under pressure. What are you seeing with Webb Travel Group at the moment, Gary?
Yeah, I've seen a few of the sort of travel companies actually sort of improve there. So I think WJL, the other part of the business there, obviously we've had a few guys looking at that business there from a corporate point of view, and that's had a pretty nice run. The WJL, the other the off spin. We've seen Webjet here, corporate travel, just a few of the travel stocks starting to improve there. Maybe a few of the tensions around the world starting to improve. So everyone's getting a bit more optimistic about travel, but just starting to sort of build here. So we saw like a nice, one thing I really look for out of these sort of deep lows, Andrew, is like some sort of basing type of pattern. So if we see like 3 higher lows sort of set up there, that's a really sort of good basing pattern. So oftentimes it can take a few months to set up here, but the recent basing patterns have been really quick out of this April 7 low here. So just like we've sort of seen like a bit of a breakout there, seen a retest of the 50, just pretty constructive there. So oftentimes when you get a false break here, like the April low came back and retested that October 24 low, means you normally go back and retest the high here. So that's got a target above 520. So probably looking to move to 530, 540 here on the upside.
All right, okay. Let's get into energy now with a focus on coal with Stanmore. Talk us through this one.
Yeah, look, we've seen big moves in like uranium, big moves in oil and gas, and some big moves in the coal stocks. Yeah, obviously, uranium's been the highest flyer here, but we have seen the oil and gas sector being pretty robust as well. But the thing about this sort of coal play here is that volume just sort of stands out. It's really, really massive volume here over the last few months. So it's just sort of showing signs of possible accumulation taking place. So I think that energy, all the news around sort of data centers, they're sort of forecasting 3 to 4 times many, demand in that area there. So we're just going to need a lot more energy requirements there in the coming years. So just pretty robust for all those energy segments there. So just think, the Stanmore looks really interesting there. Just that volume really stands out, and oftentimes if you don't see sort of big volume come in initially on the early stages of a move, you normally don't get the big follow through. The bigger moves are usually accompanied by bigger volume coming through. So they talk about sort of a big basing pattern there, but if you do see that big volume print there, sort of shows you that there's some activity in this sort of stock here. So I think if it breaks out the upper side here, that'll be a pretty good sign there for Stanmore.
All right. And Gary, just finally, let's take a look also in the energy space with the largest being Woodside, and particularly off the back of its latest acquisition. But overall, the stock has suffered over the past couple of years.
Yeah, it has done. Yeah, so Santos is probably similar looking sort of setup as well. But again, we have that sort of basing pattern sort of appearance there. We've got those sort of 3 higher lows sort of setting up here. had a nice acceleration higher there, and we've just pulled back again. So look, if you look at that volume there, the last probably 5 or 6 sessions, the volume's dropped right off, and we are sitting well above the previous sort of swing high. So just leaving it in a pretty strong position in the trend line. So I think if we break out of this little wedge here, we're going to see, potentially another move higher here. But I just think that energy area, so sort of something that I've been talking about the last month with clients there, just looks pretty, that's probably been one of the strongest segments that have come out of this April 7 low. Now, one thing we know is that the sectors that show the greatest strength coming out of lows, they normally tend to sort of go on and have bigger moves. So just that's an area that we should be looking at here. And, you can see the uranium names have already had a big move here the last couple of days after having that first leg higher. So I think some of these, got to look into some of those other segments in that energy complex.
Gary, great stuff. Thanks for talking us through the charts.
Thanks, Andrew.
Thanks for joining us from Novus Capital. All right, that is the trade for this Monday.
The trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au. The trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.